Thanks for listening to A Long Time in Finance with Jonathan Ford and Neil Collins, in partnership with Briefcase.News, the service that brings intelligent curation and analysis to your media monitoring. Hello and welcome to Long Time Shorts, a new series of shorter than usual episodes of A Long Time in Finance, each one of which gives you a quick hit of financials history, from the debt jubilee of ancient Babylon to the latest crypto calamities.
We're going to look at a man called Bernie Cornfeld.
Now that rings a bell.
Yes,
What was his famous catch line?
It was something like, "Do you sincerely want to be rich?"
Do you sincerely want? Yeah,
it was a great catch line.
Brilliant.
And
slogan.
Of course, there's only one answer to that. And so this was his slogan, this was his sales line, and this was essentially all he needed to build his business, apart from total self-confidence and an ability to be a brilliant salesman. I don't think he was ever anything much else. But he was...
So what's his background? Where does he come from?
He was born in Brooklyn in 1927.
Yeah.
He did all sorts of things before stumbling upon the idea that he could sell pooled investments to punters. And at one stage, he decided that the best way of doing this, because it produced so little cost, was to concentrate on one building full of office workers, the Empire State Building. And he could go round from office to office, floor to floor, selling this stuff, and on behalf of his employer. But of course, he had no travel expenses and no worries about the weather. So it was...
He sounds like a model employee.
It was brilliant, really.
Yeah.
And of course, he could also say, oh, well, those people in the office upstairs have just bought some of this. You know, it must be good.
Yeah.
So you could see how this was
and they're
pretty
total idiots.
pretty wonderful sales pitch. He realized this was such a good idea that he cast around and lighted on Americans, mostly servicemen, in Europe.
So this is just after the Second World War?
This was just after the Second War. Obviously, there were a large number of American servicemen and other personnel in Europe at the time.
Yep.
And the tax rules meant that if they didn't repatriate their pay from Europe, they didn't have to pay tax on it at the time. So there was a tax angle here that he saw, and he decided to set up this business, which was essentially aimed at Americans, but it was neither controlled by the American authorities nor by the European authorities.
Oh, so it lived in this sort of black hole between two worlds.
So the Americans thought it was European, and the Europeans thought it was American. So it did give him rather considerable freedom just to make things up as he went along.
It's what's called in the trade an edge.
An edge, yes. And the edge he had was that he decided to charge a commission of 20% of the amount invested. And
he told the investors,
"Oh no,
I'm going to invest your money and take a fifth of it every year."
No, not every year. This was the one-off then.
Oh right, the upfront.
Yeah, exactly. But I don't suppose this was emphasised to the eager buyers.
Right.
And of that 20%, he paid 8.5% to salesmen, and of course the salesman rushed to join his enterprise.
Yeah.
Which he called Investors Overseas Services, and with the slogan, "Do you sincerely want to be rich?"
Right, which was really aimed at the salesman and himself rather than the investors.
Absolutely. And of course it was brilliantly successful for them because it grew like topsy. And this money was mostly put into funds, open-ended funds. An open-ended fund is one where you are entitled to a slice of the assets, but each time the fund is priced, then a new buyer gets new units in this fund. So it expands the size of the fund and in theory doesn't affect the value of each unit to you.
Right.
And of course, the great thing about it is that what really matters is getting in the money.
Yes.
Rather than any sort of tedious business of actually trying to perform. So the emphasis always on an open-ended fund is getting more money in,
Yes.
which means essentially rewarding salesmen to
Yes.
try and find new punters.
There was a bit of an echo of this in the case not long ago involving that man Neil Woodford, who also had an open-ended fund where he basically had a huge incentive to bring in as much money as he possibly could from everybody.
Yes, but
Not that he is in any way.
But no, of course not. But I mean,
tremendous figure.
that is how an open-ended fund works. Yeah. It's so much more difficult to make the investments do well than it is to get more money in.
I suppose my point is, in a thing where you collect as much money as you possibly can, there's always a risk that you get so much money that you can't possibly really do a good job with it. Whereas if you are stuck with a sort of pooled closed fund of, say, X million, that's what you've got to work with. And you live or die by the success of your investing. I think that's the point you're making.
Yes, there's nowhere to hide with a closed-ended fund.
Yeah.
An open-ended fund, there's plenty of scope for manipulation, especially if new money is coming in.
Yeah.
And you can decide what to do with that.
Yeah. So basically, say I'm an American serviceman and I put in my $1,000 and the money goes to you as Bernie, and then you put it into various funds which you've created.
Or you can choose which fund.
Or I
that you
say I
want.
want that one and that one.
you
But
choose-
there are funds, and Bernie is at the centre of. He controls what these funds all do.
Well, obviously, he runs the management of these funds.
So what they invest in.
Yeah, so you can choose which fund that you want. And they had all sorts of glamorous names.
Yeah.
But then his masterstroke
Yeah.
was to invent this thing that he called the fund of funds, which allowed the punter to get exposure to a huge variety of investments, some of which were perfectly good, some of which were essentially investments in other funds.
Right.
So you were effectively adding another layer of
So more fees.
more fees, more costs, exactly. But of course, more possibility of sincerely becoming rich, because someone somewhere might
becoming rich.
actually someone might actually do well, and they, by stroke of fortune, some of it would percolate through to you.
Now, I'm assuming that the marinas of the French Riviera are not jammed with the yachts of Bernie Cornfeld's customers. So they're presumably at some point where everyone suddenly wises up to that all is not quite as rosy as they had been, and their sincere hopes are not going to be fulfilled.
Certainly the yachts mostly belonged to the salesman. It was estimated that he created over 100 millionaires from the
Just not
from
his
the
customers.
sales. Not the customers. It's the where are the customers' yachts? We know that one.
But so when did it? How did it all go wrong in the end?
One of the things that he did to try and sustain the underlying value of the investments was that his funds bought the rights to a huge area of Western Canada, the oil rights. And what he did was he took a very small chunk of that and sold it to another fund inside the fund of funds umbrella at a hugely inflated price. And then he said, that's what this all is, the whole thing is now really worth.
Right.
So we're going to revalue that. And that, of course, made a big impact on the supposed net asset value until Charles Raw, who died last year,
He was a journalist on the
excellent
Sunday
journalist
Times.
on the Sunday Times, saw through this scam and exposed it. And that, I think, was one of the things which really started to pull the rug. But the collapse came when a whistleblower, an internal accountant, started looking at what was really going on in a very complex interlocking series of funds and assets, and discovered that essentially a lot of them were illusory. At that point, obviously, the game was up.
So what happened to Bernie?
Bernie...
Did he go to prison? Did he
yes,
pay for his dreadful crimes?
Well, yes and no.
Oh.
I mean, he was detained by the Swiss authorities in jail for 11 months. And then they dropped the charges and he walked away. And he was never actually prosecuted for what he did. And the amount of money that he lost to these investors was measured in low billions, which in those days was a good deal more than today's high billions. But he never paid for his crimes. And at some stage towards the end of his life, he popped up again as a possible bidder for MGM, the movie studios. It never went anywhere.
Of tales.
And
tall tales.
Yes, quite fiction speciality, and eventually died in London in 1995.
How extraordinary. Not a kind of classic sort of moral fable where the man who does all these terrible things ends up having his comeuppance. But did he achieve his own sincere goal to become rich? Or did he end up dying in relative poverty?
I don't think he was short of money when he died.
Okay. So there we are. Crime sometimes does pay.
Well, obviously, it's paid for him. That was A Long Time in Finance with Jonathan Ford and Neil Collins. Production and editing by Nick Hilton, and our sponsorship partner is Briefcase.News. If you enjoyed the show, please rate and review it on your podcast app, as that will help new listeners find us.